Welcome to another top-down charts weekly macro themes run through. So what we do in this video series is we take a look at a recent edition of the weekly macro themes report. This one was from a couple of weeks ago. And we take a look at one particular topic and just add a little bit of extra context. So this report is part of the institutional paid service that we run. It's just one part. There's also a chart book and a few other services as required by our clients. So the first one we'll be looking at in this one is the China property and investment outlook. So we'll start with the bottom line. It's always useful to have a look at what the conclusion is before running through it. And that is, China's property price boom looks to be slowly running out of steam. A possible downturn later this year will be bad news for base metals. And this really highlights an important point. I mean, there's quite a number of reasons why you should be looking at the Chinese property market. And one of them is if you are interested in commodities, because it has a really big, important bearing on base metal demand. China is the world's largest consumer of a lot of commodities, accounting for at least half of the market in many cases. And so, if you think about the property market, it is really a huge consumer of commodities such as iron ore for steel and copper for wiring and piping. So we'll take a look at the first one here. And what the format is, by the way, is we have a little bit of text, a bit of explanation, a bit of context. I don't like to write essays. I think that I would rather respect people's time and try to give them the insight as quickly and efficiently as possible. So it has to be quite concise, clear and insightful. And the bottom line helps that. And then it's really about making the charts do the majority of the talking. But sometimes you need to talk to the charts, and that's what we're doing here. And the first one is looking at the price boom that's currently underway in China. And you can see that there's been quite a significant turnaround here versus the downturn that we saw in 2014, 2015, and that certainly led to a lot of the market turmoil that we saw around there, and accentuated the downturn in China's economy and also the downturn in commodities in general. And so the black line here is the average year-on-year property price change across the 70 cities. So this is from the National Bureau of Statistics data. And you can see there that the average property price change has actually started to roll over after reaching very, very strong levels. And the red line there is a breadth measure. So that's really just the proportion of cities that are seeing positive year-on-year price gains. And so that's when it's gone from 0 at the worst to now just shy of 100%. So you can tell from that the boom has actually started to become a bit broader, and you can see that here in the second chart. So this is the median year-on-year price gains across these two groups, tier 1. So it's the top cities, which that's 30% is speculative mania territory, really. That's come and gone. The authorities have stamped pretty hard on that with a bunch of measures to tighten things up. But X tier 1, you can see that it's steadily accelerating there. But it looks like the latest reading has slowed down a little. We'll get the June readings later this month, so I'll be certainly providing an update on that. But it's important to see where we are and where we have been, but it's also important to try and find some leading indicators, and that's what we're doing on this page. The first one is basically longer-term interest rates in China, and they have topped out recently or stabilized, but they had run up. So this is inverted, by the way. So they had run up from a little under 3.5 to close to 5.5 there. And as you can see here, there's a reasonably decent relationship between longer-term interest rates and property prices. There's a lot of sensible reasons behind that. For example, when you go to buy property, interest rates obviously impact on the amount that you can borrow, and it also reflects, affordability, etc. So there is a sound economic reason behind that, and should the historical relationship hold, you expect that the property prices will start to roll over, beginning probably pretty soon, actually, and if it goes one for one, it will be accentuated in 2018. The other one, less of a lead on this one, M1, money supply growth, and that has rolled over, and you can see that there's also a bit of a link there between prices, and so that's another one that's saying that average price gains are going to go from somewhere around 8% towards the 4% level, that it's going to at least get slower, if not continue going down. We get the next reading of that red line probably next week, and here's where we sort of bring it a little bit closer into the so what. So the first one there is property prices against real estate fixed asset investment growth. And we can see they've put a little note in the chart. As the stock of property completed increases over time, the responsiveness of real estate fixed asset investment to rising property prices decreases noticeably, and vice versa to the downside. So you can see there that when property prices were rising, that pretty much led to almost an instant gain in real estate fixed asset investment. And around this period here, there wasn't enough property, so that's what was driving the big boom. There simply wasn't enough modern property for to meet the demand, and then they'd gotten to the point where they'd built arguably a little bit too much, and when you saw that upturn in price there in 2013, it hardly even moved the fixed asset investment. But and then you saw that downturn there, which was followed by an actual contraction in real estate fixed asset investment. And then in recent times, you've seen a really big surge in property prices, but no real reaction on real estate fixed asset investment. And one base metal that finds that's particularly sensitive to China is iron ore prices, and you can see that with that turnaround in prices and fixed asset investment, that helped lead to that big run up in iron ore prices. It's at least helped it find a bottom at that point. But given the reaction, the rebound in real estate fixed asset investment wasn't that much. It wasn't supporting an iron ore price at that high. So, I guess the point of looking at this, certainly in relation to this chart, and signs of a maturing boom here, and if not a downturn coming maybe next year, that as a minimum it puts a cap on the demand, and in the worst case scenario, it means that iron ore prices could go quite a bit lower from here, should the property market roll over, and so that's probably the key sort of risk factor for base metals over the sort of next 3 to 12 months, I guess, but really over the medium term, and then of course, if these leading indicators prove correct and it turns out to be the start of another downturn such as the one that we got there, that the property market is really quite key to China's risk and economic outlook, so it's definitely one to keep on top of, and it's one that we've been really quite focused on, and one that we will continue to update our clients on. So I'll leave it there, and if you've got any comments or questions, please do pop them in the comment section of the video below, and be sure to subscribe to our YouTube channel so that you do not miss any future videos.